Okay, well, yes, not so much of a reaction in Japanese stocks, and I think largely that could have been because there certainly has been a risk off over the past couple of months. Now we have seen foreign money coming back in again, but I think it's just a little bit too early to decide as an investor if you've been bringing money back into Japan, well, it's time to take it out again. Immediately. So I believe what we're thinking is that, or the thinking is that it's going to be a short conflict. The one big hit by the Americans will be effective, and then we'll get back to sort of business as usual, in which case there's no need for an immediate panicky type reaction. Well, the US strike on Iran certainly is a very good advertisement for defense equipment. And so around the region here in Asia, we do have two very large defense equipment manufacturing bases, which of course is Japan, where there's 30 odd companies, I believe, listed that actually are involved in the defense sector. Then, of course, Korea, which has built out its defense manufacturing capabilities quite substantially over the past few years and is now engaged in substantial exports. So very good for those industries. Right. Okay. So if it's a sustained conflict, then of course the profile of the risk profile for all this changes because of course that would lead to higher oil prices. Obviously, it's a very the whole region, Middle East, obviously, is very important to oil, and 20% of the world's oil flow goes through the Straits of Hormuz. So, should there be an embargo or some disruption to oil flow and the oil price does go up and stays up, then that will introduce far more inflation into the economies globally, and of course, particularly Japan, because it imports so much of its energy.